And then just don't put all your money into one account. And at the same time, don't put all your money on brokers. So I've got 7 rules, and I would like you to comment below with whatever you think I missed out. And if you're new to this, read the comments below and let us know your thoughts as well, because I want you to interact and I want you to share what you know so that other people can learn from you and then everybody else gets better. So comment below at the end of this video for sure and fill out if you want. So first rule is only trade with the market context. Now notice here that a lot of people online say only trade with the trend, and I didn't say trend or trade against the trend. I said the market context, because what you're gonna do in the market depends on what you prefer. And some people could trade with the trend, some people could trade without the trend, but they all kind of consider the market context in what they decide to trade. You could trade reversals at the top of a range and it's going to be against the trend, or you could go with the trend and trade pullbacks or breakouts from that same range. So it's not about the trend, it's not about whether you go against it or with it, it's about what you do in the overall context of the market. The best traders I've met and I've talked to always have this kind of understanding of the market context, of the overall picture, and that's what gives them an edge, because they know that overall the price is more likely, or like some chances out of 100 it's going to do this, and then they can decide what to do based on that kind of market context. So that's really important, and it's not about doing one thing, it's about doing what you're comfortable doing in the context that you see in the market, and that can save you a lot of time and a lot of pain and a lot of drawdown as well. So that's the first thing. The second rule is something I had to change over time. It's don't put all your capital into one trading account. Now for a lot of people, they just put an account with any broker that they like or that they think is going to make them money, and they put all their economies, everything they saved, into that account. I don't really see the point of doing that, and I would much rather you diversify your accounts, having different accounts, because we never know what's going to happen with the broker. Something can happen and sometimes you're going to be protected, but you don't want to be in a place where you cannot trade for some time because of a problem with the broker or things not going right with that broker. So for myself, I now went to having 2 accounts with 2 different brokers. One is Rwanda, one is AxiTrader, but that doesn't really matter to you. You just open accounts with the brokers that you like and that will meet your criteria that you have for brokers, and then just don't put all your money into one account. And at the same time, don't put all your money on brokers. Like most of my money now is not in brokers, it's outside of brokers. It's sometimes things I invest, it's in sometimes just cash for some reasons, but it's not all in brokers and in trading, because of the fact that I would much rather have some money in the bank than in my trading account. For me it's more safe there, and then if I want to use that money, I'll just use my money in the brokerage account to risk a little bit more based on the money I have in the bank. So I can risk more. I know I have the capital to sustain the drawdowns, and so I can risk knowing that I'm not risking too much for the overall money I have, but it's not all in the broker. And that's something good to understand, that you don't have to put all your capital in the broker, because if something happens, you are sometimes, as I said, going to be protected, but the other times you're protected up to a limit of I think 100,000 depending on where you are located, and that's kind of important to know. So it's about not putting everything in one basket and not putting everything in like even 2 baskets. You want to have something saved so that you're secured, and if something were to go wrong where you have to wait a long time to withdraw your money or whatever reason, you're safe and you can still go with your life and have fun and do whatever you want to do. And so that's really important. That's something I learned over time, and I didn't do this from day one at all, but I've now learned that I need to go and be more safe about it. And rule number 3 is kind of similar to that whole thing. It's be aware of when you might screw up in the market. There's going to be times where we're likely to make mistakes, we're likely to not do things right, and those are times where you should stop, take a break, and do something different to be able to come back with the proper perspective, the proper way of doing things, and the proper balance to be able to act properly on your trades or on something you want to do. Like if you don't feel like backtesting, you're likely to start backtesting and then screw up. So instead of trying out and pushing yourself to try to do it, go away, come back when you're going to be fresh, ready to do it, and then do your backtest from start to finish. If you're not ready to perform the action you're supposed to perform, then the result of the action won't be the same, and that's important to understand. Same thing if you are in a trade and you feel like you might take too many trades because like you're angry or you're frustrated because of a trade in the past. Don't place a new trade. Understand that you might not be performing at your best now. Go away for some time, come back later when you feel in the proper state, and then do what you're supposed to do, then come back with the proper perspective. And just that tip alone can save you a lot of time and a lot of money too. Because like you're not gonna put too many bad trades in a row. You might put one, and then you realize like pretty fast that you're not in the right state of mind. You're likely to screw up right now, and then you will stop and you will come back later. Alright, so that can be very useful, but you gotta make the effort to understand when you're likely to screw up. And that takes practice, takes time, of course. Journaling really helps for that, but you gotta practice and see how you do it, and kind of look back at what you did and see where you kind of tend to screw up most of the time. And that's really important. I know for me, back a few years ago, I had a really hard time when I had a couple of losses, like a small drawdown. I would not want to place the next trade, and I was likely to screw up. Now in that case, it didn't mean like me going away. It just meant sometimes me forcing myself to still place the trade, because I knew I was likely not to place it. But for you, it could be the opposite, where like you have a drawdown, a small drawdown, and then you are likely to place more trades. And so in that case, you would go away and do something different to be able to come back with the proper perspective. All goes down to what you're likely to do and what you can do to resolve this problem and this action, and do the right things when you're likely to not do it properly. Okay, so that's really important. And that's tip number 3. Tip number 4 is track every single trade you take, no matter what. A lot of people are gonna track when they feel like it, or they're gonna track in their journals when it's convenient. Like they're there, they see the trade, they can track it. But then they might have a trade and they'll say, it doesn't matter for this trade, like I'll do it next time. And that's where everything goes wrong, because the next time you're more likely to not do it. And so you want to track everything no matter what. For me, that meant making a rule and having it posted to my computer sometimes, saying when you close a trade, track it. And I would read this sometimes, I would see it in my face all the time, and I would track it. I would like put it right there right away. And I developed like this habit of when I close a trade, I track it. And that was done all the time. I didn't have to think and to kind of remember and stuff. I made the habit. And you want to do the same thing. You want to track everything, because then you get to create a backlog of things you can review. It's not about tracking how much money you make. It's about getting data so you can later evaluate, review, to be able to make more money long term. And if you can't do this, then you're playing it for the short term. And most people that do it for the short term in trading are short term traders, and they don't really succeed long term. And that's the big issue. Like you want to be able to stay here long term, do this for long term, and it's always going to be more paying to build a business out of it, like we talked about in a few videos back, as opposed to being there short term and trying to make a quick buck today. Okay, and trying to place the right trade today. So that's really important. Track every single trade when you close it or when you enter it, depending on what you prefer, no matter what. And that's going to make a big difference right there. Now, tip number 5 is don't get attached to a trade. That was really hard for me at first. I would enter trades, I would feel like this was a proper trade, the right setup, perfectly aligned, the perfect setup ever, the best thing you could see. Then I would kind of become attached to it. And when the trade was loser, I didn't understand. I was like clueless, and I wanted to maybe put even more money on the trade. And that's because I was attached to a trade. And if you're attached to a trade, if you attach yourself to the outcome of a trade, you're already losing from the start, because then a trade could do whatever it wants to do. It could go back and forth, it could go up and down, it could go to your stop loss quickly. And the problem with this is that you don't understand the fact that the market is random in some sense. There is some odds you can calculate, some probabilities, but overall, the moves happening on a daily basis are random. Who knows who's going to trade what, who's going to come in the market doing what? No one knows. And that means that every trade you have could be a loser or a winner, no matter how good the setup looks like in this instance right now. So if you attach yourself to a trade, you're likely to lose anyway, and you're likely to react when you have an outcome that you didn't predict. And that's really big to understand. If you say, I'll just take that trade and not caring about the results, it's going to be fine whatever happens, then whatever happens, you're fine, and you can take the other trades after. You don't have to kind of be there and angry because you lost your trade you thought you would win. You just detach yourself, you do whatever you have to do, and then you leave, and you don't care about whatever happens. You just go back to the bigger picture at the end, and from there you can calculate what your probabilities were and everything you did and what was right, what was not. But at least you have this kind of big picture later, as opposed to being attached to every trade, the outcome, and what happens. Even if you have to lose for a long time, it doesn't really matter, because you're there to do what you have to do, and then leave, and that's it, and be attached to anything. Like, it's not a relationship, it's a trade. So if you see it this way, it's gonna be easier, I feel. So that is for rule number 5. Rule number 6, and I'm kind of almost done, is the fewer rules you have, the better. And that goes well with your strategy. So a lot of people in trading have like thousands of rules, or if they're like maybe even 6, 7 is like too much. So the more you reduce, I found, the easier it's gonna be for you to execute, do the right things, and not forget your rules, not forget what you're supposed to do. If you have like 10 rules, you might forget one, especially if you don't have a checklist. If you have a checklist, it's gonna be easier. But in all cases, the mental effort you need to place a trade with 10, 12, 15 rules is a lot more than placing a trade with 3, 4 rules, right? Those are things that anyone can do. And so the fewer rules you have, the less risk for bad trading and the more risk for proper trading. So placing the right trades, having the right data. And I've always been myself on the simple side of things, where I have fewer rules. I take the trades I'm supposed to take based on those, and that seems to work well for me. But for a lot of people, it's not natural, and you kind of want to simplify first as opposed to having too many things at the same time. And then you'll probably see that your results are more consistent this way. So instead of having like 5 indicators, get only 1 or 2 at the most. Like, that's going to be easier for yourself, you're going to be less confused, and you will probably even take more trades, which is going to be probably good for your bottom line. If you really need to have something to kind of have your strategy profitable, then add it, that's fine. But if you don't need it, if it's just because you heard about it somewhere online, or somebody on the street told you about the indicator or the thing you're looking at, then why are you using it? Did you test it properly? Did you go through all the checks to make sure that this will be producing better results? In most cases, no, and that's where you want to kind of drop things, add them back if you really need to, and just use the essential things in your life and in your trading. And that I found is pretty helpful. Now I have this one last rule, rule number 7, and that rule is simply the fact that you gotta create your own rules. You can't just like follow someone and use everything they do everything they do, because there are other parts that you need to do for yourself, and we are all different. That's why I want you to comment below with your number 1 rule, the thing that you use the most in the market. Comment below with this, because there might be something I missed out, of course, because those rules are for me. I want to hear from you, and you comment below, let me know your thoughts. And once again, guys, I appreciate you watching these videos as always. Comment below this video with your thoughts, give a like if you liked it today, and here are a few comments in the past video. I appreciate you guys for leaving your comments as always. Really smart people here in the comments, and you should read this sometimes. And I'll catch you back here for another video tomorrow. Ciao.